Good morning, and thank you for joining us today on our Tax Tuesdays. The last session was a Tax Thursday, but we're going to stick to Tax Tuesdays now going forward. Very pleased and very happy to have Rashmi join me today. She's going to be our regular co-host, so thank you for joining us today, Rashmi. So just to give you a quick introduction, my name is Rayhan Halim. I'm the founder of Taxstar and Alpha Pro Partners. We're doing these webinars, once every 2-3 weeks to do a deep dive into corporation tax topics. Next year, you're going to be in the thick of things of preparing your calculations. So we want to be here to help you with, things you haven't thought about, things you need to take into consideration, given the fact that the law constantly is changing. The latest change was the multinational companies are now paying 15% corporation tax, right? So there's lots of things that are happening all the time, and we want to be, helping, our audience go through that. I have Rashmi with me. Rashmi is the co-founder of JRB Accountants. She's a tax expert. She's been doing tax for a number of years. She's one of the very few people that I know who knows corporation tax very, very well. And also look out for her LinkedIn posts. Rashmi, you do some amazing LinkedIn posts where you go into corporation tax and you talk about some of the things that we need to take into consideration as well. Now, today we're going to be talking about corporation tax elections. Now, we're not talking about the US elections or Trump and Biden. We're talking about corporation tax elections. These are not things you can do every year. A lot of these things you can only do one time, and that's it. You're set. And these elections basically mean I'm going to be treating my company or my tax return in a certain way, based on the rules that are there. And I'll let Rashmi go into that. Rashmi, do you want to just give us a quick introduction?
Yes, sure. Thank you, Rehan. And what you've said about me, the co-founder of JRB, and thank you for you and the Techstars team for hosting these. I think it's super important to have clear understanding, not a ballpark, but specific understanding on the importance and to avoid any confusions, to go through what has been released recently, especially because we are towards the end. Now, next year, we're going to adopt actually in reporting. So we should have adopted this year, but in the reporting part. And coming to the topic for today is the elections. And why is it important is sometimes you only have one chance. And then there is a whole section number 5 in the recent return clarification that came out, which is only on elections. So they have said that which elections can be made, when it is only one time, what can be the revision. So it is super important, especially it would be most of the company's first tax period now, or they might be filing, their tax period might have ended, and they might be filing the returns. And these elections have to be made in the first return filing. So super important you get it right, super important you understand what are the impacts of it, whether you have an option and what would be the impact. Sometimes some things sound like they might not be relevant for you. Some things you do not know how much can it impact your tax calculations. So because it's a one-time election, every company should at least consider they know it, they understand it, and then make the selection accordingly. So yeah, you don't get every 5 years or 4 years an option to make your choice right, if I may say so. But then, yeah, so therefore, these elections are super important. So we thought we should cover this before deep diving into other topics, like we are planning on the 7th January to either dive into calculations or anything specific that everybody wants to cover. Before that, you need to decide the election. So it's pertinent to know it before the year end, I guess. So,
Thank you very much for that. Before we dive in, just want to obviously mention that we will have a Q&A session at the end. So any questions you have, please put it in the comment section. And disclaimer, we're not giving you tax advice. We're raising awareness. Anything we mention here, obviously, it's at your own risk. You want to make sure that any advice that we give, you want to get advice from a tax agent or a tax consultant who you have an engagement with, who you can then appoint to. Now, obviously, Rashmi, you can reach out to her as well. But you'll have to obviously, that's a separate conversation. So I just want to make that clear. So yeah, Rashmi, that's all I've got from my side. I'm going to add I'm going to add your slides to the stage.
Sure.
Okay.
Okay. So, as Rehan said, yes, it's very important that you also see that these are specific to your company, and we cannot at any cost cover all the circumstances, all the scenarios, how your P&L, how your balance sheet, how your future business plans, etc. matter. The other elections are for the realization basis, transition provision, qualifying group, business restructuring, and everybody's favorite, the qualifying free zone. So I think free zone, even the companies which are not in free zone want to discuss free zone. That's such a favorite topic and confusing topic on the
Yeah, no,
on
free zone is a night.
And so super interesting is we don't even know which are designated zones and which are the listed free zones. So it's going to be interesting. Yeah. So these are the major elections that you need to make. Certain are and what we have said on the annual elections time. So these are annual elections that we can make. So, shall we spend some time on realization basis? I think what are important for most of us here would be the realization basis, the transition, and the small business relief. The others are a little less relevant for majority of the companies, but then we will, of course, touch base on every one of them in as far as we get the time. So, perhaps the next slide. So, to give a background, what has happened is if you go through what is given in the return guide, or when you will go through the portal while filing your return, it has been made clear. The steps are there, and they have clarified that as and when you select what will be the option available. And as it happens, if you have used any other platforms or portals for return filing, if you select a yes, and then the sub more information requisitions will come in. If you select something is not applicable, the relevant sections go away. So this will also serve as your guidance as far as what declarations need to be made. But what we want to know here is how do you need to be prepared for it to make that decision. So procedurally it will be simple, it won't cause confusion. If you've taken a right decision, the forms and the way it has been described is super simple. As you navigate through the portal, it will guide you in how the declaration has to be made. What we're trying to cover is make the right choice while making the declarations. So, annual elections, small business relief. Now, we all know that we have a relief of paying only a 0% tax on your taxable income if your revenue is less than 3 million in each year to which it is applicable. So, this benefit is only available till 2026. So all the 3 years, if we say Jan to December is your year, so Jan 24, 25, 26, you can claim this. You have an option. So now where would it apply? If you go for these benefits, if you say that I want to take the small business relief, there is an election you need to make whether you want to make this benefit. If you want to take this benefit, you won't be submitting a lot of data. You would not be making a computation because it's a revenue driven benefit. You will not have to go to your profits and taxable income adjustments and other things, so on and so forth. But what happens is that if you tomorrow want to go, if you envisage yourself becoming part of a tax group, or if you think that you can have losses which you can carry forward and that will be beneficial for you rather than going for a benefit of 3 million and not paying taxes. These are the choices you need to make so that you can make the choice while filing the return that, okay, I have loss, let me not take the benefit, let me have my taxable income computation ready. If you make that choice, then you have to do all the elections, you have to do your computation right, your books of accounts, everything right? So you need to know whether you want to go for this route, how do you see your company performing, and then make this election. This selection can be made every year, subject to you remaining qualifying. So, as we know, if you lose the qualification in 1 year, so if 24 you have crossed 3 million and 25 you do less than 3 million, this benefit is not available. Any 1 year if you cross the 3 million. Yes, Rehan.
Yeah, I was going to ask you, but you answered the question. I think the key thing here is there may be some companies who are loss making. Like, for example, I know a lot of startups, right? They probably don't have revenue, but they are spending a lot of money on, development costs and various other costs as well. I guess in that situation, it kind of makes sense for you not to go through a small business relief election. But I think the key thing is, though, I think if you do go down the small business relief route, it's a pretty straightforward form, right? So the cost of compliance, I'm assuming some accounting firms will probably not charge as much. But if you go through the full computation, I guess in that situation, you're doing a full, even if you're loss making, I think businesses need to realize that it's not just because you're loss making doesn't mean there's not any effort required from an accounting firm or a tax consultant to prepare your tax return, right? I guess you are going to have to pay the fees that are required.
So I would say if you are tax making, you might need to be more careful than the profit making. So if you if you are telling government that we are not going to pay taxes to you and we are going to adjust the losses further, you need to be more careful than it's same as asking for refund from FTA on VAT,
Yeah,
right? It's difference between paying and asking back.
yeah,
And very importantly, yes, as you said, details are to be prepared and all the compliances. So now, once you say that I want not to elect for small business relief, as soon as you get into the area of calculating, computing your taxable income, be it loss, positive or negative, but calculation of taxable income, everything applies. Your transfer pricing applies, your salary that the owner is taking, whether it's compliant to transfer pricing rulings, whether you're making any other RP transactions and their declarations, your IFRS compliant books, be it IFRS SME, IFRS compliant books, all other entertainment expenditure identification, your accounting heads that you are recording in your books, and your other elections. Now, as soon as we go forward, there are other elections also. So if you say I'm making computation, then any other election that is applicable to you applies. So you need to see. But then, yes, then it becomes as normal full compliance, and then you do not get any other benefits. So, yes, the pros and cons. How much loss do you think? How much do you think you will spend in compliance? Are you ready? Do you have any of the challenges? How do you want to play it? That needs to be decided before you just don't take it as a tick box exercise before you file your first returns. All these elections are super important, and these are elections only in first year, most of them, not these, but then others that we cover. So you need to make this effort only in the first year. Next year onwards is going to be easy. First year you need to make this investment. If time permits, we'll come back to foreign PE. I'll just quickly touch base on this one. If you have a foreign PE, if you have a branch outside, if you have any other operations outside, and you can elect to pay taxes on that here, or you can elect that you do not want to pay taxes here. You want to exclude all the income and expenses of that PE and report it in that particular country and not here. And then you will get an option from your PNL to exclude it. There are certain terms and conditions on that. One being that that particular PE has to be subject to corporate tax in that or a similar tax in that particular country, and the
yep.
rate has to be 9 or higher. But
Just
not
to
many. Tell me.
Yeah, sorry. Just to clarify, foreign PE doesn't mean a subsidiary, right? Foreign PE would mean that it's a branch, specifically a branch of a UAE company.
Yeah, a permanent establishment, which is not as such a legally registered entity. It could cover the subsidiary as well. I'll have to double check on that. But then I
Yeah,
think the PE covers all your permanent establishments outside, where you have an option to pay
yeah,
taxes in that particular region as well.
yeah. And I think, I mean, in my experience, I haven't really come across that many foreign PEs in my experience, right?
Yes.
But I think what it could be, I think where it's probably relevant is, let's say let's say you're an Emirati, right? And you have an establishment in the UAE, and then you also set up an establishment in Saudi. Because as an Emirati, as a GCC citizen, you can set up a GCC-owned establishment, which is not a LLC, right? It's a sole establishment. I guess in that situation, this is one example where that could that could apply. Um,
Uh,
in,
yeah.
Gone.
So again, it would depend on what's the legal structure, what is the taxation rules in that across country. You're paying taxes there already. Because you're paying higher taxes, it makes sense that you do not again consolidate. Otherwise, you can take the tax benefits here
Yeah,
in the sense that the foreign tax paid credit here or this. So this election needs to be made based on, yes, what are the tax rules there? What do you anticipate? Again, you're not paying taxes there, you want to take the losses here, and you want to club it because their losses you will never be able to carry forward for the number. So each country has a limitation on number of years you can carry forward their losses, right? But
yeah,
UAE has it in unlimited period of time. So if you think that you by the time you make profits, your losses will lapse in those particular country, but makes sense to have it in UAE and take that benefit here. So these are the certain circumstances we are making those choices based on. Otherwise, the tax on the profit anyways needs to be paid in the country you are operating. Yeah,
I think also one final point I just want to make
sure.
is that with you got UAE and KSA withholding tax, right? And if you want to get into withholding tax exemption, there's a lot of paperwork that you got to do. So I think you got to be very careful with this particular election, because although you may want to, join or separate, you may also want to think about administration, the administrative process of doing that. It's not just doing the election in your corporation tax return, but it's also getting the relevant documentation to ensure that you are able to um, process those elections through the various documentation through the taxation treaty
Yes.
as well.
That is there, and before going to the double taxation treaty as well, very importantly, what you brought in is that if you elect any of such things, you need to see that your books of accounts recording, your systems, your data recording points are accordingly aligned, because you need to remove all the expenses and revenues related to that particular establishment's operations, its marketing, its whatever you have done, right? So maybe
Yeah,
as a entity you do not pay so much of attention of profitability per unit, but then now if you elect to segregate it, then actually the books of accounts have to be so prepared that as if they are two separate entities operating. So yes, you have to align your data recording, reporting, internal management, internal reporting to get the information to make these elections. So you have to align those as well. Yeah.
yeah, no, great point, great point.
Yep. I think we can go to the more two more the next slides. I think. Yeah. Uh, this is what I want to talk about. Two of them, which is the realization basis, and on the next pages there would be the first time election of your transition provision rules, right?
Yep.
So these are the two things. Let's cover the realization basis and then the transition. Or maybe I'll cover the transition first, because there are two, three things which are super important in transition rules. I want to spend some time on it. So transition rules basically, not many people have paid attention that these are the benefits available. You will need certain data for that. You will need to make this election for it, and it has a permanent effect. Even if you go to a group, you form a tax group, in tax group, or you separate. Why? Because transition rules apply for three categories, right? This is for an immovable property, it is for intangible property, and then there are your other financial assets and liabilities. Immovable property, the choices of election of option to be having benefit of avoiding tax for the capital gains for holding period prior to tax becoming applicable is asset wise. So if I hold four properties, I can make that election asset wise. And while making that election, I need to also make an election that whether I will use it, whether the basis I will use is the time period for which it was held, or
Yep.
whether I'm going to use it for the capital gains, right? So when you make this, you need to have this information to make this election, and you can make it property wise. Now, how does it impact? If you have a qualifying group, or if you do any business restructuring, and then or you form a tax group, and you take this entity and the asset to the tax group, the same election will apply and continue applying there as well on this asset. So if I held an immovable property and I move from individual registration to tax group, still the election I made continues to apply. So you need to see how you're planning your property to be used. If they are huge asset bases and you think you're going to use it certain manner, how the valuation was, and till when are you expecting to hold it, whether the period makes sense. If right now you think it's not important for your entity to hold an asset, but if you become a part of a tax group because of structuring, restructuring, and then that asset becomes relevant and you are going to hold it for longer period, then maybe the valuation basis makes more sense than the holding period. But if you're going to hold an asset only for 1 year in the taxable period and all other are none, then you make it on taxable period basis. So now you need to have a strategy and your business plans across all your assets and need to see which elections make sense. And this election, again, has to be made whether you are selling your asset in the coming year or not, whether a transaction is happening or not, you need to make these elections in the first year. So now analyzing across your asset base, intangible, you only have a maximum of 10 years. So you can make that election that you can only take past 10 years. But in case of immovable properties, the election is for whatever period you're holding it. So that's going to be interesting, especially where the your business type is asset holding base, because luckily this years have been, the property values have been very high, and the
Yeah.
property value. So if you take that as opening balance, maybe you are able to take the benefit of lesser capital gains profit when you actually sell them. So you need to see the market prices, and that had to be at the opening balance level. So you need to have that data while filing your return. So you need to have the number of years of holding, the number of days of holding, your calculation on that, and your valuation if you want to take that basis. So yeah. And the third class is your, so immovable properties, you make the choice property wise. And other financial assets and liabilities, you make the choice whole class together. You do not make it asset wise. So I cannot, if I hold 10 scripts at the 10 scripts at the exchange, I cannot script wise make a choice. It has to be the whole shareholding, my shareholding investments, that I have to make one choice. So this is going to be super important. These could generally be the high ticket values when a transaction actually happens in the coming years of a buy or a sell, and therefore a very significant value or material value of tax impact. So it's super important that we make these elections correctly,
Yeah.
and this is only on transition. Yeah.
Yeah, I guess this is quite an important factor for many businesses where, they're paying corporation tax for the first time, and some of they need to review the opening balances and see what opportunities are there for to be as tax efficient as possible. And unfortunately for businesses, it's not something that it's not a DIY process. You're going to need to get experts to kind of help you. There are some things which are DIY, you don't need a tax expert to figure out. But in this situation, if you've got property and it's worth, quite a lot of money, it's important that you spend that time and effort to get it right. So then, as you liquidate property in the future, you're not hit with such a big tax charge. So, super important election, and thanks for sharing that.
Yeah, and as you brought it up, many companies have not paid this attention, that they feel that the year books of accounts and the closing books of accounts are important, but these are the aspects where you need to see that your opening balances play the role. Your opening balances have to be right, because tax authorities see that opening balances of your compliance years make sense or make impact, and therefore they have said that your opening balances have to be IFRS compliant, not your closing, not just the year calculation. Your opening balances have to be IFRS compliant. So ideally, your previous year have to be made according to IFRS to get to the correct closing, which is your opening for your tax period. So
I'm just conscious that we've got about 5 minutes remaining. So, which
I
election?
will I will try to cover the realization basis, and I'll quickly touch base on the qualifying on this. Uh, okay. Free zone election, because whatever election we make in free zone, we know that every impact is for current plus 4 tax periods. So it's a super important that we make the elections right. And we need to see, even if we make the elections, that we qualify for the tax that we get. And there has to be a reason why you forego of the 0% tax. If you do not want to get into the compliances, because if you make a free zone election, you have to get the audits done, transfer pricing done, etc. So if you do not see the benefits, you elect not to be qualifying for the free zones. Realization basis is available only when you're doing the books of accounts accrual basis. The same concept as what we discussed in transition rules, and same important thing, because when you say that you want to be charged for the profits on realization basis, your opening balances realized values will have to be declared, and non-realized values have to be declared in the first return. So first return again becomes very critical for the information sharing, that you should have these data ready with you, not just the closing balance, but your opening balances while making the tax return filing. It is again irrevocable unless you make a FTA uh, approval, which we presume is going to be difficult. And all these elections that we make, Rehan, will be auto-populated every year in your tax return. So if you selected a no will be auto-populated without an option to change that, and the option to give the information under it. Because you selected no, there is no relevant information options available itself. So you need to know that this, once selected, would impact your all years declaration. There's no way that you can bypass it unless you go to FTA and let your portal be changed.
Good
If
luck
you
on
can go
that.
to the yeah. Okay, very quickly, qualifying group and business restructuring. We know that we have benefits of taking the benefit of having some asset transfers between qualifying group, that is your 75% plus holding, common holding groups. If you elect, you will have to make this election in the first year, that if I'm foreseeing transfer of certain assets and liabilities between the qualifying group's companies, then you want to make it at no profit, no loss basis, and no tax to be paid on that, and no capital gain to be paid on such assets transfers. So this is what you need to foresee. Elect it today to be able to take the benefits tomorrow. So your business planning and your business vision becomes important. And same is the business restructuring. Here, the even if you make the election, the normal conditions do apply of the 2-year clawback. You need to hold the asset at least for 2 years if you have taken the benefit, etc. You need to consider them while making the election. Did I take less than 5 minutes?
Yeah, we've got another 1 minute, then we do Q&A. I think the key thing about business restructuring is, I guess this is more for big companies, right? When they acquire businesses and they divest. And I mean, I deal with a lot of small businesses, and I don't really see that happening, the business restructuring element happening often. But the thing is, a lot of small businesses actually do have qualifying groups, because they may have multiple licenses. They may have like a holding company, an operating company, some random company that they've had for like 10 years that they've not done anything about, right? So I think that is quite an important one, and I think that's going to impact a lot of businesses, whether they know it or not.
Yeah.
That's something that they would need to take into consideration.
So one thing, I'll take 1 more minute, which is interesting in the declaration of the qualifying group, which was missing in the VAT since a very long time. That if you say that I want to qualify and transfer certain thing from one group, one company to another, because they are not part of tax group, it's another TRN, right? So when you make these elections, the TRNs will have to be selected. So your plus here becomes a minus there, and a minus there auto-populated and auto-cross-checked between the two TRNs returns.
Oh,
So
wow.
this is one thing which is going to be here, which is still missing from VAT, alhamdulillah. But then here it will be cross-checked.
No, that's quite interesting because when we're going to be building our group product in Taxstar, and we're going to take that kind of approach as well. So it's quite interesting.
It's
Okay, we don't have any Q&A at the moment. I think any Q&A, guys? I think a lot of these. I think obviously, free zones is a completely separate topic on its own. Qualifying free group. All of these are like these elections are. We just touched upon them just so people can think about what they need to do when it comes to corporation tax. But each one is like probably a
topic
series
in
of
itself.
a deep dive topic in itself, and we will be covering them obviously over the next few months and stuff as we talk about some of these topics. We do not have any questions so far. We are recording the session. It's on LinkedIn Live. It will be shared on YouTube, and we will share it on our feeds as well. Feel free to reach out to myself or Rashmi if you have any questions, or just reach out to us on LinkedIn. Anything you want to close with, Rashmi?
I think all I would want to say is that sometimes these topics, as we hear right now, transition, qualifying, business structuring, seems that for my company it won't be applicable. Or right now my company is too small to have these complicated or okay, this, that, the other. But the only thing is what you need to see is for things like qualifying group or any realization basis options, you need to see what's your vision and what's your business looking like 5 years down the line, 10 years down the line. What's your overall vision? And there, what will be your prospective balance sheet items? And there, how it will impact. So it's not an exercise that if my balance sheet and P&L is simple right now, this is not applicable. You anyways are going to make these elections, right? So it's super important that discussion, vision-based discussion within your CFO, your tax consultants is done so that you make an informed choice based on the nature of business you have. Maybe some businesses are heavy intangible assets. They are already building it. They would be having certain impacts. They might be holding it already, or they might plan to buy an intangible asset company tomorrow as their growth strategy. So these elections are based on your strategy long-term, not on your current P&L and balance sheet.
Yeah, no, thank you for sharing that. So we are planning to have our next session the first Tuesday of January. So we look forward to seeing everyone there. If you have any questions, like I said, feel free to reach out. This session is recorded. So yeah, hope you guys have a happy or a peaceful break. Yeah, good break, and be ready for the mad rush next year when you all got to do your tax and all the questions that you're going to get. So we're here to help you with that. Thank you very much, Rashmi.
Thank you, Rehan. Always pleasure.
Take care, guys.
Take care.